Okay, today we are going to go through insurance news. We've just had Hurricane Helene rip through the East Coast. Our hearts go out to everyone there that is suffering as a result. It's certainly a lot worse than a lot of the experts anticipated. And we had a tragedy on the radar due to some of the feedback we received from large reinsurance carriers. They had predicted that some events would be taking place this year, and it turns out that they were right. So with that, we are going to dive into some insurance related news and see what else is going on. So we have some California based news regarding the governor trying to push some legislation through there. We have some St. Louis news and some news on insurance companies suing a power plant. So let's get into it. So Florida's homeowners are still on the hook for the nation's highest average insurance premiums, but don't blame your next bill on Hurricane Helene. Why it matters: the storm had potential to devastate the state's embattled insurance market, but experts aren't worried that it will. Large-scale wind damage from hurricanes, not flood damage, is what can drive up premiums, and much of the damage reported from Helene so far appears to have come from storm surge. What they're saying: if you don't carry flood insurance, Florida's CFO Jimmy Patronis told WPTV last week, you may not have a place to stake a claim. So Florida already has the highest rates in the nation for homeowners insurance, and many do not have flood insurance. Most flood policies are provided through federal national flood insurance program rather than private insurance, reported the Tampa Bay Times. Since new Floridians have this coverage, much of the damage could be uninsured. So we're seeing a lot of reports on this. I saw another one that said 80% may not have any insurance for this storm. So more than 80% of Florida residents don't have flood insurance. This is from WPTV. There are many areas of Florida where you can get flood insurance for $40 to $50 a month. In West Palm Beach, Florida, this is where Matt Szczesny, Skazinski. With the threat of flooding this week, we are learning that more than 80% of Floridians still don't have flood insurance. That's a stark contrast to the 18% of homeowners in the state who have a flood policy. And experts said that's the biggest risk in place where flooding can happen in every corner of the state. Regular policies don't cover flooding, and unlike regular homeowners insurance policies, costs for flood insurance are not skyrocketing. The average cost of flood insurance in Florida is under $1,000, so that's less than $100 a month. There are many areas of Florida where you can get flood insurance for $40 to $50, says Mark Friedlander of Insurance Information Institute. If you don't live in a coastal area, meaning just 10 to 15 miles away from the coast, you can get a very moderate cost for your flood insurance. But the point of me bringing this article up, it was written prior to Helene. 80% of people in Florida do not have flood insurance, and I wonder what is the percentage of people that don't have flood insurance in North Carolina. We are seeing reports that North Carolina is going to be the hardest hit. We originally thought it was going to be Florida, but it really looks like North Carolina is the hardest hitting. Okay, so Helene dumps rain on millions of U.S. homes that lack flood insurance. So this is from Insurance Journal. On Thursday night, Helene crashed into Florida's coast as a Category 4 hurricane. The giant storm with 140-mile-per-hour winds made landfall close to where Hurricane Debby hit in August and where Idalia struck just over a year ago. It quickly made its way inland, knocking out power for millions. And even before that, it started dumping rain, now 12 to 15 inches across a swath of Georgia and South Carolina, and a stunning 29 plus inch in Busick, North Carolina. The disaster underscores America's disastrous low levels of flood insurance coverage, especially away from coastal areas. Massive flooding is being reported across the South and into Appalachia, tomato, with photos and videos showing towns from Florida to North Carolina underwater. This will be one of the most significant weather events to happen in western portions of our area, a weather service in western North Carolina said. As of Friday afternoon, the French Broad River through Asheville had come within about a foot of its all-time record. So from what I understand, Asheville was completely wiped away, pretty devastated, and the town is just a fraction of what it was before. In Atlanta, Peachtree Creek rose more than 20 feet from Wednesday to Friday, according to the National Weather Service. Across the U.S., 36 river gauges had reached major flood stage, while an additional 147 were registering water overflowing the banks of rivers. They are all in Helene's path under its torrential rains. So roughly 4% of Americans have flood insurance, according to the Federal Emergency Management, FEMA, basically, with the majority of those policies issued under the government's National Flood Insurance Program. The rate in no way matches the risk posed by more frequently extreme rainfall events. So these are the areas where people generally cannot get insurance on their own, and no private insurance company will take them, so they go through a government-funded program. And the article goes on to say homeowners who live within FEMA designated flood zones are required to buy flood insurance if they have a mortgage. However, FEMA has mapped only 1/3 of America's floodplains, according to the Association of State Floodplain Managers. Moreover, most FEMA maps don't consider pluvial flooding or flooding from rain. That's likely one reason why flood insurance take up away from the coast is negligible. In many inland counties in the southeast and Appalachia, tomato, coverage under the federal program stands at 2.5% or lower, according to analysis of federal data. So, going on and on about this, but really the consensus is that most people do not have flood insurance. Most people are going to be extremely devastated from this event, whether they're in Florida or North Carolina or some of these other states. On average, roughly only 4% of Americans have flood insurance, because most people get flood insurance because their mortgage carrier, their bank, requires it. So the bank will not issue the loan without having homeowners insurance. You just can't get it. But if flood is not a requirement for that mortgage to be issued, many people are already scrapping together dollars and cents to try to afford their mortgage and even get into a home. So any extra cost, most people poo-poo, and they say, hey, I'm not in a FEMA designated flood area. If the bank doesn't think I need it, I probably don't need it. And the realtor doesn't really say much because, hey, they want to close the deal and get things moving. It seems like that 38-day escrow, everybody's just moving to push paperwork through as quickly as possible. And there's not a whole lot of time to think for most people. So it appears that as a result of all of that and then some, most Americans don't have flood insurance. And I'm sure, just like myself, pre-insurance, I would assume, there's a hurricane, everybody's going to be taken care of. That's what insurance is for. However, most people probably aren't going to be taken care of, and they're going to lose their homes. I mean, really is what is going to end up happening, because how can you afford to live in two places at once? Meaning your house gets flooded, you can't live there. You have a baby, you have kids, you're elderly, whatever the condition is. If it's an unlivable situation where your house has been flooded and there's mold, or your furniture is soaked, either the food is ruined, the plumbing is likely ruined from all of the flooding, the drywall, there may be mold, there may be toxins, who knows what came up with that water, sewage and chemicals perhaps, who knows what's in that flood water. So many people may not feel comfortable returning to their homes and living in that home. Now let's say they owe $2,000, $3,000 a month on their mortgage. Now they can't live there and they need to stay in a hotel, or they need to stay with a family member. Maybe if they're lucky enough, they can stay with a family member, but at some point they will want to get a more permanent residence, as most every human does. They want to be self-sufficient, live on their own. So those people will likely want to rent or look to buy something else. And who can afford that? Who can afford to pay the mortgage on the house that you're not living in and go and rent something out, or stay in a hotel and pay a hotel fee every day? So just really a lot of issues, humane issues that are going to result as a result of this tragedy. So let's go on here to see what else is going on in insurance news. Okay, so the next article, we're going to switch gears here, look at California. It appears that the government there is trying to get IVF treatment covered as a requirement. So the governor of California, good old Newsom, is signing a bill making insurance companies pay for IVF treatment. All right, so let's go to this CalMatters, nonprofit, nonpartisan news is what they claim. We will see about that. I saw some other other news outlets and tried to steer away. I'm trying to remain nonpartisan and factual here. California expands access to in vitro fertilization with new law requiring insurers to cover it. Okay, so having a baby via in vitro fertilization is about to become more accessible for many Californians after Governor Gavin Newsom today signed a law requiring certain health insurers to cover fertility treatment. IVF is a process in which eggs are retrieved from the ovaries and fertilized by sperm in a lab. The fertilized egg or embryo is then transferred to the uterus. The process can be stressful and emotional. It's also very expensive. Treatments can run in the tens of thousands of dollars, making it unattainable for some to leaving others in debt. In California, moves to insure IVF comes after 4 similar bills over the last 5 years stalled in the legislation. So they've tried this 4 other times. At least 14 other states already require that IVF be covered. Newsom's signature also follows IVF's emergence as a contested issue in the presidential election, and after a controversial court decision in Alabama jeopardized access to fertility treatment for people in that state. California is a reproductive freedom state. Newsom said in a written statement, as a national leader for increasing access to reproductive health and protecting patients and providers, including those under assault in other states. I want to be clear that the right to fertility care and IVF is protected in California. In many other states, that is not the case. Senate Bill 729 will require that large group health plans, that is, employers that cover at least 100 people, provide coverage for the diagnosis and treatment of infertility. This includes a maximum of 3 egg retrievals and unlimited embryo transfers. So they get to try multiple times, because when they first put the egg in the uterus, it may be rejected several times. The law pertains to approximately 9 million Californians enrolled in large group coverage, state-regulated health plans. The new law does not apply to people who get their health coverage from religious employers or people enrolled in Medi-Cal. So they believe in it so much that their government-sponsored plan isn't going to cover it, but okay. The law will go into effect in July 2025 for most beneficiaries and in July 2027 for government workers who get their health benefits from California Public Employees Retirement System. So they're doing it there in the retirement system. Approximately 1 in 8 couples experienced fertility problems in 2019. Just over 2% of all births in the country were a result of fertility treatments. The new law also broadens the definition of infertility so that the same-sex couples can be treated, making intrauterine insemination and IVF more accessible and affordable is key to achieving reproductive equity for the LGBTQ people, said Senator Caroline Menjivar, a Van Nuys Democrat and author of the bill. According to an analysis of the proposal, out-of-pocket costs for one round of IVF can cost close to $20,000. Some women may need multiple rounds, as we already talked about. So, me personally, I do not know ethically or morally what God thinks about, so what made me kind of go, okay, scratch that. So when it talks about these other states restricting people's rights, there is a moral argument. Again, I don't really have any firm footing on what is morally correct or incorrect in a situation like this. So I do want to argue the other side. So there are some that feel that when an egg is created into an embryo, it is a life at that point. So having multiple and having to choose just one out of that batch can be, you could see how that could be creepy or cruel depending on one's religious background or moral standing on that particular issue. However, there's also the other side where there are loving families that want to have a baby. They're struggling. They're going to be great parents. They're obviously people, maybe not up until now, but up until now, if somebody was going to spend $20,000, $30,000, $50,000 to have a baby, they're obviously financially pretty well off and will be able to care for that child and have an educated child, get them to college, and that child arguably would have a better life and become a better citizen as a result of having attention and not being neglected, and just, like other perhaps children in the world that get the contrast to that, right? That are neglected or not loved and not given, financial support for going to college or other educational or other means of raising a child. I mean, let's face it, raising children in 2024 is expensive. So again, I see both sides. Again, I can more go back to individual rights. It's not really my place to tell you that you can't do it. It's your eggs, it's your sperm, it's your embryo, it's your body. I don't think that the government should get involved in any of it. I think it's an individual choice, and who knows who's right? At the end of the day, it's between that person and God. So in short, the government of California is requiring employers of 100 employees or more within a traditional health plan to pay for IVF treatment and fertility treatment. Okay, so this was the St. Louis article that I had seen. Okay, so this next article is about coverage in St. Louis, and although you may think, hey, I'm not in St. Louis, or maybe a few of you that are listening that are, this sort of contract negotiation happens to all plans. So it's going to happen in any state, and it may be an example of something that you are going through with your healthcare provider, and this may give you a glimpse into how insurance and these medical groups or hospitals kind of have, backroom fighting and fight with each other and do these power struggles through media and PR campaigns. So let's get into this article and see what's going on in St. Louis. So Mercy warns of dropping Anthem, potentially affecting in-network coverage for patients. Mercy, one of the largest healthcare systems in Missouri, is threatening to stop accepting Anthem insurance unless an agreement on how much the insurer reimburses hospitals for care is reached by the end of the year. Chesterfield-based Mercy, which operates dozens of hospitals and hundreds of other outpatient locations in the region, has announced it intends to move out of the insurer's network in January if Anthem does not agree to a new contract. So what has happened is Mercy is saying, this is how much money we need. We're giving ourselves a raise for whatever reason. They probably have a lot of data showing that they are losing money on Anthem contracts. And they've gotten to the point where they need this amount of money, and if Anthem doesn't give in, then they will not accept Anthem as an in-network provider. And that it behooves Anthem to work with Mercy. I mean, they have tons of doctors and hospitals that their patients need care within, and I'm sure Anthem would lose a lot of business if Mercy fell out of their network. So that's the downside for Anthem. Anthem obviously would have to raise rates for those patients and for those individuals living within those areas. And oftentimes what insurance companies will do is they'll make a plan with and without that provider. So there will likely be a more expensive network that those Mercy people can enroll in next year that will allow them to have access to this network. So insurance companies do this all the time. However, they do play chicken with the patients, and all of the patients receive a letter from Mercy, and they probably are receiving several letters from Anthem stating that their doctors are not going to be in network starting January 1st. And these sorts of letters that patients get are anxiety inducing. These people need the treatment. They're patients for a reason. They're sick. They have chronic conditions. They have planned surgeries. They are seeking health care. They are trying to get better and getting these awful, terrifying letters. And usually these things work out. I've been doing this for over 20 years now, and 95% of the time, everybody kisses and makes up and they come to a solution. So I would, if I were in this situation, if my family members were in a situation like this, the first thing I would do is tell them to take a deep breath and play the wait and see game and try to understand that these negotiations go on. They are not thinking about you as the patient. They're thinking about their bottom line in business, and unfortunately you are collateral. And again, I understand it's anxiety inducing, and I don't know how much comfort that will bring you, but let's go through this article and see what else they have to say. Anthem officials claim Mercy is asking the insurer to pay too much money to cover procedures. Mercy officials said Anthem is putting too many administrative barriers in its contracts, such as requiring providers to obtain the insurer's approval before doctors perform a procedure, and that makes it more difficult to treat patients. I agree with both. I agree there's too much bureaucracy in insurance. No health insurer should make healthcare harder. And we have just continued to see more and more administrative burdens placed on our patients, placed on our caregiver providers. said David Thompson, Mercy's Senior Vice President of Population Health and President of Contracted Revenue. We are putting our foot down and saying no more. Thompson said the insurer refusal to cover certain procedures and requiring prior authorizations in which a provider must get an insurer's go-ahead before prescribing a drug or conducting a procedure don't add value to the overall outcome of patient care. So, of course, Anthem requires these prior authorizations. They want to talk to the doctor. They want to talk to the nurses. They want paperwork filled out. They want questionnaires filled out before they will approve certain procedures and, MRIs, CAT scans, certain medications, of course, surgeries. And this provider is saying at some point you need to trust our providers, you need to trust our processes, and know that we're not just willy-nilly having these people get these procedures. Anthem officials said those measures are in place to keep costs down for people and companies that buy insurance plans. So they want to make sure it's absolutely necessary. Of course, these insurance companies have been burned before. There have been providers out there that have filled out paperwork and said they are giving certain procedures to patients, and they don't give the procedures to patients. It's just to get paid. They say they gave, knee surgery and filled out a claim and didn't. Of course, this probably not happening with a large provider like Mercy. And so that's one extreme that has happened before, insurance fraud. The other are doctors and or dentists that have members go through procedures that they know they're going to get paid out on unnecessarily. So instead of getting, let's say, an x-ray would do the job, perhaps they do an MRI instead. Because the MRI is more expensive, the insurance company doesn't want to do that, they want to do the x-ray. So these are the fights that happen behind closed doors and now out in the open through this article with insurance companies and hospitals, doctor's office, and medical groups. And of course, I see both sides. However, perhaps they can agree on some procedures, some guidelines, some situations where if this and this and this happen, yes, we will automatically allow an MRI. If that and that happens, yes, we'll automatically allow this surgery. Instead, streamline the process with your larger providers so that everybody can calm down and not have to do so much paperwork and not know if things are going to get paid or not, and not drag these poor patients through all of this mess and all this paperwork. I believe this is about the rate increases, she said. This is about them asking for a reimbursement rate 5 times higher than inflation and us trying to strike a balance of coming to terms on an increase while maintaining affordability and access to care for our members. So the insurance company just can't say yes, 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 yes to all of these doctors and providers, because if they raise their rates too much, people will not be able to afford it. The only people that will afford it will be usually the sick. The people that need it the most are the ones that are willing to pay more for the coverage, and this leads to adverse selection. We talked about this many times before. If a plan has too many sick people in it, that is called adverse selection, meaning that all of the healthy people drop out because perhaps the plan is too expensive and they decide to just either go without coverage or go with minimal coverage. So you'll see this where the piece of the pie where all of the people in the plan are illustrated in a pie chart and the majority of them, or more than half of them, turn out to be extremely unhealthy. That's where you start seeing plans unravel, spin out of control, rates spin out of control, and the only people that enroll in those plans are sick, and that is called adverse selection in a nutshell. Mercy officials said the claim that they want to charge 5 times the inflation rate is false. Anthem officials said they're confident in the number but can't elaborate further. Health systems regularly negotiate how much insurance companies reimburse hospitals for the care they provide to those insured by the company. Such negotiations are private, and details are rarely made public. Hospitals with lots of patients or with many locations can leverage their size and achieve higher reimbursement rates. Insurers can leverage their large patient networks to pay less expensive reimbursement rates to health systems. So as you can see, this is a common thing that we see in the insurance market. This is just an example of an argument between a large healthcare provider and an insurance company. Now, there's another article here that talks about insurance companies that are suing a private company. So let's look at that article. That'll be the last article for today. Great. Okay, here we go. All right, so this one is 62 insurance companies sue Inland Power over Gray Fire losses. So this was updated on September 30th. This is by James Hanlon of Spokesman.com. Dozens of insurance companies have joined in filing a suit against Inland Power and Light for damages that resulted from Gray Fire last August. The suit, filed in Spokane County Superior Court last week, alleges Inland Power was negligent by failing to properly install and maintain electrical equipment that caused a fire and for failing to turn off its power lines during a red flag weather warning. The Gray Fire destroyed 240 homes plus other structures in Medical Lake. Oh, that's a very interesting name, Medical Lake, and the surrounding area. One man died trying to escape. The 62 insurance companies from across the county are represented by Berger Can Law Firm, based in Irvine, California, and claim Inland Power's negligence led to financial losses from payments to their insured customers, damaged real and personal property. Inland Power did not immediately respond to a request for comment on Monday. The company recently denied responsibility for that fire in response to another lawsuit brought by a group of residents weeks after the fire. In court documents, Inland Power argued that its actions or inactions were not the cause or foreseeable cause of the fire and that it was the result of an unavoidable accident or an act of God. The Department of Natural Resources investigation earlier this year determined that sparks from the Inland Power security line mounted to a power pole started the fire. Witnesses complained to Inland Power several months before the fire that the light was flickering. The utility company later replaced or attempted to repair the light according to the lawsuit, which alleges improper installation and maintenance of electrical equipment. Eyewitnesses told investigators they saw sparks or burning material falling from the light pole shortly after the fire started. At least 2 other lawsuits have been filed by residents against Inland Power in connection to this fire. The insurance lawsuit also names does 1 to 100, meaning potential other unknown individuals or entities that may share fault. Okay, so this is just showing, how this all works. So bringing to light that yes, insurance companies pay claims. Yes, if it's in the policy as a covered item, they will pay out those claims. However, it doesn't mean that they can't sue someone if they find out that they were the cause of the fire. So for example, let's say a person caused this fire in arson, that person can be sued. Whether it's a company or it's a private individual, it's just a regular person out there, the kid being stupid, these are things that people can be held liable for in a court of law. And yes, these insurance companies do suffer losses and they do try to recoup them in as many ways as they can. And 62 insurance companies, that is quite a handful of insurance companies. So certainly wanted to cover that. And with that, thank you for hanging out to the end. I will continue to keep my eye on the news to see which direction insurance is heading in. And I do have a link down below. Like I said, I've been doing insurance for over 20 years now, so if you have any questions about your company policies, happy to help. You can sign up for a free consultation with me using the link down below. And thank you for hanging out until the end. We'll see you next time.